Well, good morning, John. It's Thursday morning. The market is yet to open, but over the last week we've been treated to Prime Minister Albanese touring around sites in China. How important, John, is this visit to China, seeing that China remains our biggest trading partner and he's yet to meet President Trump?
Look, I think you hit the nail on the head. They're our biggest trading partner. I think it's a factor of nearly 20 in terms of trade with China against America, so it's significant. China is a growing market, despite what everyone says, that China is still printing growth of 5% plus now. I know there's some scepticism, but there's no doubt the China economy is growing substantially, continues to do so. They have great capacity to stimulate parts of their economy to the benefit of Australian exporters, so it's vitally important. And he took a lot of business people with him as well, so it's a full trade delegation. It's just not the government and talking heads. It's broader than that, and I think we should acknowledge it. It's a good decision, and to do it before meeting America, I think is meeting Trump is absolutely correct.
Yeah, I mean, so their last quarterly growth numbers were, I think, 5.2%, slightly better than expected. Demand for commodities continues unabated. The iron ore price holding up better than a lot of people had forecast. So good times for commodity exports.
Absolutely. I just maintain it's the right decision. And look, there's a few issues around defence and what the Chinese did in the Tasman Sea. Look, we can get over that. As it was pointed out, we do surveillance in the South China Sea as well. Let's be realistic here. They're open waters, the international waters. We can do what we want, and so can China. We've just got to downplay those issues and upplay the international trade opportunity, which is significant. And China's part of a broader, I keep on saying this, is part of a broader Asian opportunity. So if we do well with China, we'll do very well right across the Asian region. And that's a massive population base growing at quite a fast clip, and much faster than, say, Europe and indeed America.
And faster than our own economy is growing. We still seem to be trundling along at, one something instead of two something in terms of growth. In the meantime, our stock market carries on performing very well. We're close to all-time records, nudging our heads there. In the US, the three main indices are at record highs. US banks doing very, very well. I see overnight Goldman Sachs produced a quarterly net profit of 6.6 billion, which is an all-time record. Are you worried that we're ignoring some of the risks out there and markets are overly exuberant?
Well, I just make the point, and I saw not only Goldman Sachs report, but some statements from other big banks in America. They love volatility. And some of these profit prints are off the trading book. So it's volatility being traded, and the best traders in the world are in these investment banks in America. So you can determine for yourself what sort of price earnings ratio that should be put on. But they do well in volatility. In terms of the Australian market, do our businesses, do we trade off volatility? Not really. We trade off real trade and real economic growth. And as you just said, Australia's economic growth is pretty average at present, below average. When you unpack it, a lot of our growth is through immigration, so it's just bringing people into the country that's sustained the growth. And as we've said many times before, we're not growing as fast as inflation. We're not growing our national income faster than inflation, so we're having a per capita decline in income, which is leading to the discussions coming up in Canberra in a couple of weeks, Paul, regarding the Roundtable and productivity. But it's very much about, how do we grow the economy without loading on extra costs? And it'll be an interesting debate.
Just on this productivity commission or the meeting that's due to take place, do you have any ideas for that haven't been presented yet? For consideration. How does one increase productivity other than through the better adoption of technology and the traditional methods?
Well, you've got to stimulate people and not overburden them with tax. I mean, we have too much reliance on collecting tax from the workers. We have too much reliance on taxing endurance. We probably don't have as much tax on speculation. And in the middle between endurance and speculation, there is risk taking. And we've got to be very careful about overtaxing risk and not undertaxing low risk, if you know what I mean. So we've got to unpack all that. I've maintained for many years, and when I came into the stock market, there was duties paid on every transaction for the stock market. And that's in an era where we didn't have international hedge funds. We didn't have hedge funds who were domiciled in tax-free havens, and trading through the Australian stock market as well as world stock markets, and doing so and rebating the profits back to tax-free thresholds and contributing nothing to society in the economy they're trading. So I maintain we should have transaction taxes through speculative markets like the stock market. Now everyone will go up in arms, so that means when I buy a share, I will be taxed. You clearly then have a tax regime where if you pay tax and you're not a speculator, that goes to your credit in your tax return. If you pay tax and you're a non-Australian domiciled hedge fund, then we keep that tax. So let's be lateral about this. There's a lot of money which is escaping the country which is not being taxed. Then I overlay that with some of the considerations which I see in Canada about putting revenue taxes on companies. I think, to be fair, you put a revenue tax, so you clip the revenue 1 or 2%, depending on the size of the company. That's collected, and when the companies put their tax returns in, they either get a credit for the prepaid tax. If they have a zero tax bill, then they don't get the money back. And this would stop a lot of international transfer pricing as well. So there's things like that. And then once you bring those taxes in, you can drop the taxes on endurance. You can adjust the personal tax rates. And I keep on maintaining, I don't know why we tax service or services industries, cleaners, aged care, childcare, nurses, anyone earning less than 50 grand who is paying most of their money in GST. When they consume, they're paying GST, they're paying tax on consumption. Let's be laterally here. There should be a much higher tax-free threshold. I'm not pro increasing the GST because I think it hits some people too hard, low income earners. But I think there's better ways of adjusting the whole tax regime and encouraging people to work more. And not hammering them with tax when they work an extra hour.
Yeah, that's really interesting. Well, I hope ideas like that do get some consideration.
Well, Paul, they're not going to invite me to the Roundtable, but I will publish some of these thoughts. And look, it's a debate. I always throw these things out here. I'm interested in other people's views. Some people attack me. Some people say that's an interesting idea. Some people say, look, we can vary that and get something better. I guarantee that this productivity discussion will not actually touch on some of the big issues which can be rectified. There's almost an agreement amongst, what I call the elites, the people who are generating their revenue off the inefficiencies of the economy, and they don't want it to change.
Yeah.
There's too much money being made, and I point to the public service. We have a bloated public service, which actually crashes productivity. The fastest growing part of the Australian economy in terms of employment has been the public service. That you can actually track the line. The faster they grow, the slower or the negative effect on productivity.
Very, very interesting point.
I cut across you.
Yeah, no, that's fascinating stuff, and obviously you feel strongly about it, and I tend to agree with that. One of the big stories of the week in financial circles was Trump having another go at Powell, saying that the inflation numbers suggest that the Federal Reserve should be lowering interest rates by 2%. And then some of the big bank CEOs stood up for Powell and said, no, he's doing a good job and we mustn't interfere with the Federal Reserve's independence. Do you think that central banks are genuinely independent or subject to a lot of government pressure?
Well, the history of central banks and the policy settings in the last 20 years is they're not independent. probably the most independent bank outside Australia, and it is what it is possibly the Federal Reserve of America. There's no evidence that the European Central Bank and Japanese central banks are independent. They're being absolutely behind the funding of their governments, which are being technically insolvent. A manipulation of interest rates through bond markets to keep the cost of debt down for highly indebted governments. Now, the Federal Reserve is reaching the doors, and the Federal Reserve Governor has to make a decision. Is he going to go back to quantitative easing and therefore support the American government, which is the Trump administration, deal with a burgeoning debt and an out of control budget deficit? And Trump is pushing him to that door and fighting his independence. He's saying, no, I'm going to stay totally independent. You have to fix your fiscal policy and I'll see what you do. You have to implement tariffs and I'll see what happens to inflation. I'm just going to watch this. Now, the bond market is steady, and we comment on that every week. It's important for everyone watching this video to watch the American bond market, that 10 and 20-year bond, the long-term rates. It's been steady, despite the risk of inflation coming from these tariffs. Now, obviously the investment bankers are saying, look, we want stability in the bond market. They don't want stability in the equity market. They're happy to trade their heads off in that one and bitcoins and all this other nonsense. But bond market stability is very important for the credibility of the American government, the American economy, the American dollar.
Yeah.
So they talk with forked tongue, these guys. They want stability in markets which suit them, and they want instability in markets which they can trade. I don't put a lot of credence on what the investment bankers say in America, because they are just out to make money. I don't want to be too rude about it, but that's there. But I do, on the other side, in terms of being realistic, is stability in the American bond market and how the Federal Reserve supports the Trump and the government to bring the debt of America down, to bring the interest rates under control so it can be managed. They have to work together, But that says they're not independent.
Yeah. Can I just point out that one of the big stories of the week was bond market yields rising, and particularly in Japan. If you have a look, I just noticed that Japan bond yields seem to have spiked in the last week or two. I had a look at the chart of the 10-year bond in Japan. A year ago, it was sitting at 0.8. Today, it's sitting at 1.6. So yields doubled in the last 12 months, and in the last couple of weeks, it's taken off. I'm sure that Japanese bonds don't have the same influence as the American treasuries. Obviously, they're mainly held by Japanese institutions, but surely that might be kind of the canary in the coal mine.
Well, it's important to understand numbers. And when you're dealing with massive debt, a 0.8% movement on 250% debt to GDP is a movement of about 2% of GDP, which comes through interest payments, which comes out of the economy, has to be serviced through the budget. Now, if the Japanese budget is rule of thumb 25% of GDP, and I think there's some charts which we may put below this podcast, that moves about 8% of the Japanese budget outlays. Just a 0.8% return will take out 10% of budget outlays. So you're right to pinpoint this, and it gives you an insight into what awaits America unless it gets itself under control. And Japan's has manipulated interest rates, as we know, for a great period pre-COVID to negative. Now it's trying to normalise, and what's normal in the world today, but 1.6, 1.7% on a 10-year bond doesn't seem very normal to me. But anyway, it is what it is. But they've probably reached their limit in normalisation, is your point. So they probably have to maintain QE. So they've released the valve, got some yield into their market, and now they've got to hold it at a level where the government can service that debt and the institutions can get some sort of return on their bond portfolio. Yeah. It's an interesting dilemma, very interesting. And this is what awaits America. It's exactly the same scenario awaits them.
Do you think that generally central banks are going to be a little bit more relaxed about inflationary pressures, particularly if they've been created by tariffs? Really, the effect is almost a one-off. So
No,
we can tolerate.
look, I just go back to my previous answer.
Yeah.
If governments have debt imposts, and it's not a big issue in Australia, so we have to be aware of that, but international governments outside Australia have massive debt loads. As interest rates increase or their bond costs, so it's not about cash rates, it's about the bond markets. If bond markets sit in that 3-4% level, and that's way above where Japan is, it goes through their budget. What do governments do? They increase taxes, they increase charges. And this is, whilst we don't have the same issue in Australia, we sort of have a 1% deficit and we're panicking about it because we don't think laterally. Internationally, overseas governments have bigger deficits than that, and so they create inflation through government charges. It's the recoupment of interest costs by governments, through excises and got the American tariffs, that's what they are. That creates inflation. So we have to be aware of governments, creating inflation when the broader economy is dampening down inflation. We have to be aware of that. So I think central banks have to watch what their governments do, and I don't see a lot of, it's interesting when we get to this round table, what sort of intellectual thought process will come through that round table and some of the decisions. I'll be amazed if we get some really strong views from government, public servants and business to coordinate an approach to dampening down inflation and growing production. I maintain productivity is getting production up at the same cost. That's productivity, okay? But governments will continually put up charges and prices and tariffs and taxes and excises, and that's the hidden inflation, which everyone's got to wear.
Yeah. Well, I think, John, we've run out of time. We'll have to end it there. Thank you so much. Interesting as always, a lot to think about, and we'll see everyone next week.
Exactly.